Let's talk about market performance, Efe. Now, some analysts thought that would see the market stuttering this week. Suddenly, they didn't expect this bullish trend that we've been seeing so far. What are your thoughts on the bullish trend we're seeing so far? I mean, what team do you play for? The group that thinks the market was going to stutter this week, or the group that is surprised that is surprised to see the market performing quite well?
Okay, basically what I think is happening is you have investors that are trying to take some profits getting towards the end of the year. I think it's just basically profit taking. You realize that most of the securities that are depreciating at this moment are those that have rallied pretty strongly last quarter and the quarter before last. So it's natural that you expect some investors trying to bank some profits before they lose value.
Right, Efe. So, but I mean, I must add that the banking sector is still performing quite well. FMCG sector still performing quite well. But Efe, you know, you're a fund manager. What strategy do you think investors should adopt in this current market right now?
Basically, because of the trend in the market, you do not have a specific strategy that should work. But what I think that fund managers should be doing at this moment is to rotate sectors. So, for example, the banking sector has rallied quite significantly from the beginning of the year, coming towards this period, and we do not really expect to see any significant change between what we saw in third quarter and what we'll see in the fourth quarter. What we'll be experiencing would be good corporate actions, and that should come next quarter, stroke Q2 next year. So as an investor, I think the basic thing to do is to position yourselves in securities that will affect or that benefit from the economic trend. We have the Christmas break coming up. We have the New Year break coming up. You should expect the food the food sector to actually perform quite well, because this is the period that they usually make a lot of sales.
Well, let's talk a little bit more about the sectors you think investors should be focusing in Q4. You certainly mentioned the banking sector, which is an investor favorite, it seems, and certainly an analyst favorite. You just mentioned FMCG. Tell me more about some of the sectors you think that we should be focusing on in Q4.
I think clearly there are two sectors that investors should focus on. First, you have the building material sector, and second, you have the food and beverage sector. And the key reason is that you have a lot of infrastructure development coming up next quarter and the quarter to come. Also, because of how the year started, where we had the January shock of price increase, we discovered that investors or consumers really did not have a lot of funds to spend. So this affected the food and beverage sector. We expect that trend to change next year. So as an investor, I would start positioning myself towards those two sectors as opposed to the banking sector.
Okay, well, Efe, let's talk about specific stocks. And I mean, one of the sectors you mentioned that we should be really focusing, you talked about FMCG, building and materials, Nestle, one of the top players in the market right now. But looking at its performance, I mean, I mentioned earlier, lost 27 Naira yesterday, down a further 9 Naira today. Suddenly, investors don't seem to agree.
Not necessarily. I don't think the value proposition for Nestle has dropped. What I expect to see as an investor is a more aggressive investment in names like UACN. And the key reason I would say UACN is they have a diversified business base. So they are in the painting, logistics, real estate, and food, as many sectors as you can think about. And also they it's trading relatively cheaper than Nestle, but I would not sell off Nestle, and the reason I wouldn't do that is Nestle is a guaranteed stock where you expect to get fixed income. It's more like a fixed income security where every year you expect to see a decent dividend payout.
Right, Efe, and what about the building and materials sector? I mean, Dangote Cement, certainly that's a good investment any day of the year. But let's talk about other stocks in that sector. Ashaka Cement specifically, what is your position on that stock? Do you think it's one of the stocks we should be looking at in Q4? Certainly, investors, analysts are saying no expansion plans when it comes to that stock, so no growth expected anytime soon. What's your take?
Okay, for Ashaka, we know that the company has not really come out to specify any immediate growth project or strategy. But what we should also focus on is a PE ratio for the security. And apart from Dangote Cement, which has huge growth potentials, I think that for Ashaka, it's trading, I think, at about eight times relative to the index or the benchmark, which is at 13 times. So it's still trading cheaper than every other security. And remember that for Ashaka, because they've not come out with any significant expansion project, and it's still trading quite decently, by the time we start hearing their expansion drive, you should expect the security to grow even faster than what we are seeing at this moment. So I think I'll place my bet on Ashaka.